GST notice for dealing with non-genuine taxable persons, NGTP. Navigating the complexities of goods and services tax, GST, in India requires vigilance, especially concerning non-genuine taxable persons, NGTP. Tax authorities are intensifying their efforts to curb fraudulent transactions, issuing GST notices to businesses linked with NGTPs. Understanding NGTP cases, potential consequences, and preventive measures is crucial for businesses to avoid legal and financial repercussions. This presentation provides a comprehensive overview of NGTPs under GST, focusing on identification, consequences, and how to handle notices. It also explains how businesses can protect themselves by implementing robust verification processes. This knowledge is essential for tax professionals and businesses aiming to maintain compliance and avoid penalties. What constitutes an NGTP case under GST? Definition: an NGTP case arises when a registered taxpayer is deemed non-genuine or fake by tax authorities following investigations. These cases often involve fraudulent activities such as fake invoicing, tax evasion, or using non-existent businesses to fraudulently claim input tax credit, ITC. The identification of NGTPs is critical for maintaining the integrity of the GST system and preventing financial losses to the government. Fraudulent intent. The key element in NGTP cases is the fraudulent intent behind the actions of the taxpayer. This includes creating fake documents, misrepresenting business activities, or any other means used to evade tax obligations. Tax authorities use various methods, including data analytics and physical inspections, to uncover these fraudulent schemes and bring the perpetrators to justice. Common scenarios considered as non-genuine: fake registration, bogus ITC claims, non-filing of returns, mismatched transactions. Consequences of being declared an NGTP: GST cancellation. Cancellation of GST registration under Section 29 of the CGST Act, 2017, effectively shutting down the business's ability to operate legally. ITC blocking. Blocking of ITC for recipients who have transacted with the NGTP, leading to financial losses and increased tax liabilities. Penalties and interest. Imposition of penalties and interest under Section 122 and 74 for fraudulent ITC claims or tax evasion, further straining the business financially. Legal action. Prosecution and arrest under Section 132 for severe fraud cases, leading to criminal charges and potential imprisonment. How GST authorities identify NGTPs? GSTIN verification, data analytics, mismatch reports, external information. Trigger points for receiving NGTP notices. Supplier non-compliance. Notices are issued when a taxpayer has purchased goods or services from a supplier who has failed to file GST returns or has filed returns with discrepancies. A-way bill violations. Failure to generate A-way bills for transactions exceeding specified limits raises concerns and can trigger notices from the GST department. Fake GST registration. If the GST department finds that the registered address is non-existent or the registered person is not available at the given location, notices are issued. Dealing with NGTP notices. Initial steps. Analyze the notice. Carefully review the notice to understand the specific allegations, whether they relate to fake ITC claims, non-filing of returns, or suspicious transactions. Verify GST records. Cross-check your GST returns, GSTR1, GSTR3B, GSTR9, A-way bills, and invoices to ensure accuracy and compliance. Match ITC claims. Ensure that your ITC claims match with GSTR2A, 2B to identify any discrepancies and potentials. Preparing a comprehensive response. Gather documents. Collect all supporting documents such as invoices, payment proofs, A-way bills, lorry receipts, and proof of delivery to substantiate your transactions. Submit evidence. File a proper response with all supporting documents, presenting a clear and factual account of the transactions in question. Legal review. Consider seeking legal advice to ensure your response is comprehensive and addresses all concerns raised in the notice. The importance of supporting documents. Providing all necessary supporting documents and evidence is crucial. The GST officer cannot deny your ITC claim based solely on departmental facts if you furnish valid documentation. The officer must carefully consider all submissions before passing any order. If a taxpayer provides invoices from the supplier and proof of compliance with GST regulations, the ITC should be allowed in full. Denial of ITC under such circumstances is unwarranted and contrary to the provisions of the GST law. Filing an appeal against unjustified demands. If the demand is confirmed and you disagree with the order, you have the option to file an appeal within 3 months from the order date. To do this, file an appeal in GST APL 01 on the GST portal and include a pre-deposit, which is 10% of the disputed tax amount. This process ensures that you have a recourse to challenge decisions that you believe are not in accordance with the law, providing an avenue for fair resolution. Verifying suppliers on the GST portal. One of the most effective ways to prevent dealing with NGTPs is to verify your suppliers on the GST portal. This helps you avoid transacting with fake entities and ensures that you are dealing with legitimate businesses. The verification process is straightforward and can save you from potential legal and financial troubles. Regularly checking the GST status of your suppliers is a good practice to maintain compliance and protect your business interests. Reconciling GST R2B with books of accounts. Compare data. Check accuracy. Identify issues. Reconciling GST R2B with your books of accounts before claiming ITC is essential for identifying discrepancies and ensuring accuracy. This process helps you verify the ITC available to you and avoid claiming credits that may be disallowed later. Regularly reconciling your records can prevent potential issues and maintain compliance with GST regulations. Conducting vendor due diligence. Verify existence. Confirm the business's physical presence. Check compliance. Ensure GST return filings are timely. Review history. Look for any past issues or red flags. Conducting regular vendor due diligence is crucial for ensuring that your suppliers are genuine and compliant. If you are dealing with a new supplier, consider visiting their registered business premises to ensure its existence and legitimacy. This proactive step can help you avoid dealing with NGTPs and protect your business from potential risks. A-Way bill compliance. Always ensure compliance with A-Way bill regulations, especially for interstate transactions. Generating A-Way bills for goods valued above 50,000 rupees is mandatory and helps maintain transparency in transactions. Failure to comply with A-Way bill provisions can lead to penalties, ITC denial, and further legal consequences under the GST law. Maintaining proper documentation is key to avoiding scrutiny. Regular verification of GST return filings. Outward supplies. Tax liability. Annual return. Regularly verify if your suppliers are filing GST returns, GST R1, GST R3B, and GST R9 on time. This helps you ensure that they are compliant with GST regulations and that the ITC you are claiming is valid. Monitoring your suppliers' filing habits can provide early warnings of potential issues and help you take corrective action promptly. Conclusion: staying vigilant against NGTPs. Dealing with non-genuine taxable persons, NGTPs, can have severe consequences for businesses, including financial losses, legal penalties, and reputational damage. By understanding what constitutes an NGTP case, how to identify potential risks, and the steps to take when facing a notice, businesses can protect themselves and maintain compliance. Vigilance, due diligence, and adherence to GST regulations are essential for navigating the complex tax landscape and avoiding pitfalls. This presentation has equipped you with the knowledge to stay one step ahead. Key takeaways: proactive measures. Verify suppliers. Regularly check the GST status of your suppliers on the GST portal. Reconcile records. Reconcile GST R2B with your books of accounts before claiming ITC. Conduct due diligence. Perform thorough vendor due diligence, especially for new suppliers. Ensure A-Way bill compliance. Adhere to A-Way bill regulations for all applicable transactions. Next steps: implementing best practices. Develop a robust vendor verification process. Train your staff on GST compliance requirements. Conduct regular audits of your GST records. Seek professional advice when needed. Thank you for your time and attention.